Ladies and gentlemen, good day and welcome to the earnings conference call of Vijaya Diagnostic Center Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Devrashi Singh from CDR India. Thank you and over to you, sir.
Thank you. Good afternoon, everyone, and a very warm welcome to Vijaya Diagnostic Center's Q1 FY23 earnings conference call. We have with us Ms. Suprita Reddy, Chief Executive Officer, Mr. Sunil Chandra, Executive Director, Mr. Narasimha Raju, Chief Financial Officer, and Mr. Siva Rama Raju, Head Strategy of the company. We will begin the call with opening remarks from the management, followed by an interactive Q&A session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would now like to invite Ms. Suprita Reddy to make her opening remarks. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone. On behalf of the management team of Vijaya Diagnostic Center Limited, I welcome you all to this forum. I would like to first share the key highlights for the period, following which Mr. Narasimha Raju will take you through the operational and the financial highlights of the quarter ended 30th June 2022. I am pleased to share that the company commenced the new fiscal on a positive note. With the significant decline in the Omicron variant, we witnessed a health recovery in demand from customers for the stable non-COVID business. A notable month-on-month improvement across some of our other key business parameters, which witnessed during the Q1 of financial year 23. Additionally, the company was able to enhance its network and make considerable progress on its calibrated expansion plan during this period. Our wellness business, which was impacted during the pandemic period, registered a positive uptick during the quarter one of financial 23. The wellness share, which we used to be around 10% during the pre-pandemic phase, stood close to an average of only around 6% during the pandemic period for around 2 years. So during the quarter one, the wellness segment managed to reach its pre-COVID levels by contributing 9.6% to our revenue. Going ahead, we anticipate our wellness business to continue gaining traction. I'm also happy to share that Vijaya achieved a significant milestone of opening its 100th center by adding 5 new facilities during the quarter one of financial year 23. Our new 10,000 square feet state-of-the-art hub at Rajahmundry is scheduled to be inaugurated tomorrow. This facility, which is well equipped with advanced radiology equipment, will offer a wide range of integrated diagnostic services to our customers across this region of Godavari. Additionally, we remain excited for our upcoming Panjagutta Center. This would be the first diagnostic center in South India to have advanced radiology modalities, to name a few like a 204-channel MRI, and a dual source cardiac CT. Also, the facility will be well equipped with other advanced radiology equipment like a PET CT and a gamma camera. Following the commissioning of this facility, we would like to invite you all to visit and have a first-hand visual experience of this world-class facility, which we believe would certainly be one of the best in the country. Overall, Vijaya's expansion plan remains well on track, and it remains confident to achieve its target to open over 15 centers in the financial year 23. Over the last few months, there have been a lot of discussions on the increasing competitive intensity in the diagnostic industry. With regards to this, I would like to state that we at Vijaya are confident about our inherent strengths, and we do not see any major long-term impact on the growth of our well-established business. We believe that the new entrants would in fact largely take share from the unorganized diagnostic players whose customers could be price sensitive. The aggressive pricing strategy adopted by some of these new entrants could have some impact over the short term. However, we don't expect this strategy to work in the long term. I would also like to add that Vijaya's integrated business provides a significant edge over the competition as its labs become a one-stop shop for patients looking for a wide array of testing comprising of both radiology and pathology testing. Additionally, Vijaya is able to differentiate itself from competition by having a favorable revenue mix skewed towards high-margin radiology and B2C business. In fact, during the year of FY23 Q1, the company managed to derive 95% of its revenues from B2C business, which, unlike B2B business, is not only margin accretive, but it is also relatively rare, price sensitive, and has a high brand recall virtue. Having said that, we are closely monitoring the on-ground industry trends and aspire to swiftly take necessary initiatives towards the evolving market dynamics going ahead. We are confident that the trust which Vijaya Diagnostics has been able to build with its customers over the last 40 years and other inherent strengths of Vijaya makes it well placed to manage uncertainties and register positive growth. To conclude, I'm confident that the internal and the external factors bode well for VDC's growth. Today, there are multiple tailwinds which we believe would enable the Indian diagnostic industry to maintain its steady and consistent growth. The company's growth plan remains well intact as it aspires to expand its potential in Tier 2 and Tier 3 cities of its core as well as adjacent geographies, which are untapped. This, coupled with our strong balance sheet and continued free cash flow generation, would also continue to support our business. We therefore remain confident that our strategic initiatives will enable us to provide high-quality growth and strengthen our leadership position going ahead. With this, I would now like to hand over to Mr. Narasimharaju, our CFO, who will take us through the operational and the financial highlights for the quarter ended 30th June 22, and thank you all.
Thank you, Madam. Good afternoon and warm welcome to everyone joining us on the call today. I will briefly take you through the company's operating and financial performance for the quarter ended 30th June 2022. As briefly indicated by our CEO, Q1 FY23 witnessed a transition in the revenue mix profile from COVID to non-COVID. There was month-on-month improvement in the non-COVID business during this quarter. For example, the non-COVID test volumes, which stood at 0.68 million in April, increased to 0.73 million in May and also to 0.76 million in June 2022. Overall, the number of footfalls stood at 0.75 million as compared to 0.94 million in Q1 FY22. The number of tests registered a marginally year-on-year increase of 2% from 2.18 million to 2.23 million. The revenue per test was 469 rupees and revenue per footfall was 1395 during the current quarter Q1 FY23. The consolidated revenue for the quarter stood at 104 crore as against 123 crore in Q1 of last year. This decline was largely on account of decrease registered in the COVID business. The non-COVID business revenue stood at 101 crore, comprising 97% of our revenue share as against 74% revenue share in Q1 of last financial year. Overall, our non-COVID business registered a growth of 12%, while COVID revenues registered a decline of 90% on a year-on-year basis. Also, the radiology business stood higher at approximately 36% as against 32% in the last year Q1. EBITDA for the current quarter was 40 crore as against 57 crore in the corresponding previous period. EBITDA margin stood at 38.2% as against 46.3% in the last year Q1. Lower Q1 revenues coupled with incremental expenses for the upcoming facilities largely impacted our margin performance. We are confident that our EBITDA margins would certainly rebound in the upcoming quarters once these new centers attain maturity. The profit after tax, the PAT for the quarter, stood at 17 crore and the cash and cash equivalents stood at 235 crore at the end of June 2022. In conclusion, I would like to say that overall things are moving in the right direction and the company remains confident of delivering consistent performance going forward. This brings me to end of my address. I would now expect moderator to open the line for the Q&A session. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star in one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Ashita Jain from Edelweiss. Please go ahead.
Hi, thank you for the opportunity. So you mentioned that our business is good.
Sorry to interrupt, Ms. Jain. Your audio is breaking up.
Hello?
Ma'am, we are not able to hear you.
Hello? Is it better?
Much better. Please proceed.
Yeah. So I was just saying, you just mentioned that our business is growing on a month-on-month basis. So how are things looking in July and August?
Sorry to interrupt, ma'am. Your audio is breaking up. We'll request you to disconnect.
Yeah, I'm doing that too.
Yeah.
Thank you. Yeah.
I think, Ashita, what I could hear is that the increase that we have noticed month on month in the current quarter, is it observed in the subsequent months? Am I correct?
Yeah. So are we seeing that month-on-month improvement in July and August as well? How are things?
Yes. Fortunately, we have seen that month-on-month increase noticed even in the month of July and also August. We have seen that improvement. In the business.
And do we still maintain that in the next 2 years we can still grow at around, say, 13 to 15% growth? Is that doable?
So, Ashita, as you know, for our business, the growth predominantly comes from opening the new hub centers and then adding the spokes once they stabilize, So what we have mentioned that in the current year we are opening 2 state-of-the-art facilities, one in Rajahmundry and one in Panjagutta. We expect a significant revenues coming up from these centers for a period of 2 to 3 years. So apart from that, almost like 11 spoke centers and the 4 hub centers that we promised in the current year would be operational. So considering all these centers in pipeline, we expect that the growth in the non-COVID business, double-digit growth, we strongly believe that it will continue.
Sure. My second question is on the margins. So given the competition that this industry is facing, we may be required to invest more. So do you still see our margins moving back to the guided range of 40 to 41% in the near term?
So, Ashita, as I think Raju just mentioned, we are expanding. So in fact, in Q1 itself, we had 5 new centers which have opened. And these new centers, usually what happens is that, even before they open, staffing and all the fixed costs are going to still hit our P&L, right? So as they open and start contributing, you will see that, the revenues improve. And when you have a lot of new centers which are being opened, that has maybe a temporary effect. Expenses tend to slightly hit your EBITDA margins. And this is something that we expect that it will normalize, especially because this year we are going to open at least those 4 or 5 hubs and over 10 to 11 spokes. Many of them are already in progress. Rajahmundry is being inaugurated tomorrow. Panjagutta, again, the center is fully ready, equipped, staffed. It is just not opened yet. So, these are some factors which are, going to impact the EBITDA. Now, if you look at competition, there are two aspects to it. One is that unorganized competition is not new. It's always been there. Recently, we've seen some of these, maybe digital platforms. But what we have seen is that, they are doing some deep discount strategies where maybe that is the kind of nature of their business. They look at it as a customer acquisition cost. They are not looking at the cost of the test. They are just saying we will give some discount and try to get business. But in healthcare, we've always felt that this is not a very sustainable strategy, because at the end of the day, the quality of services and the trust of the patient, this is what drives the long-term growth. So we feel these will be short-term in nature, and over the next year or two, you will see that, we are quite confident that our growth plans and our strategy will continue to be profitable.
Sure. Thank you. Thank you very much.
Thank you. We'll move on to the next question. That is on the line of Prakash Kapadia from Anived Portfolio Managers Private Limited. Please go ahead.
Yeah, thanks. Couple of questions from my end. Wellness business has increased to 9.6% as compared to 4%. So is it by design or it is by default? And also if you could give me some understanding what is the ARPU in this segment, what kind of packages we have, starting range to the high end range.
Prakash, this is not defined. We are getting this revenue from the packages that were available in the company from long time. So pre-COVID, we were at 10% of our revenues from wellness, and during COVID, Q1 FY22, it was 4, but otherwise it was roughly around 6%. So majority of these packages are from retail and corporate. Majority of it is again from retail, and we have packages starting from 900 rupees in our outpatient. So this and we have wide variety of packages, right, from something like diabetic package, cardiac package to the high-end whole body package.
Okay.
And like we mentioned earlier, the uniqueness of these packages and why this wellness business is a key differentiator is because all of our packages have a mix of both imaging and pathology. So if there's only a bunch of lab tests, it's not going to be holistic in nature. So everything starting from 900 to your 9,900 will have a mix of some amount of imaging, cardiology, and pathology.
Understood. And do we have some tie-ups with, say, doctors where, post the wellness report or the package, a doctor is, assigned to the retail customer where he shows the report, or, there is feedback or some further process, or we are not thinking of that?
So, Prakash, in some of our large centers, like our flagship centers, which are hubs, where the package load is quite high, we have in-house doctor who visits only for 1 hour or 2 hours to basically, it's a free service that is provided by Vijaya Diagnostic. This is only to give some amount of guidance on what these tests mean by getting a package done. But there is no arrangement where we send these patients to any doctor, or we as consultants sitting within Vijaya Diagnostic refer these cases elsewhere. Because we are doing a whole body package, it is only to basically check reports and guide them and let them know, give them some wellness and lifestyle changes required, nothing more than that. And that is also available only in our flagship centers.
Understood. And in the, packages, have we seen any price cuts or, more discounting happening at our end, or prices have remained stable for us, given, a lot of guys are now focusing on this business to scale?
Sure, Prakash, so there's absolutely been no change in our pricing when it comes to wellness packages. But like Sunil mentioned, a lot of competitive intensity in a lot of online aggregators and all that. But the wellness bit, like Shiva mentioned, the packages remain same, and even the mixture of the test has not been changed. So there's not much of a, and that's also why I in fact stressed in my opening speech that we grew and we are at a 9.6%, which is a good signal to say that we are headed in the right direction without any of these changes being made at all.
Understood. And also, can you help me understand, say in a normal year, I'm not talking of, non-COVID or COVID kind of revenues. Generally, Q1 is, the weakest quarter for us. Is there some seasonality for us where, Q1 typically tends to be lower than the whole year average? How is, the seasonality bit for us in our...
Because historically also we've typically seen that Q1 is a weaker quarter for us. Probably even in the past years we have seen that, and that's also a reason why again we stress, and in fact even in our presentation I think in slide 9 we've shown that it's actually showing it's a good signal to see a month-on-month growth happening. But Q1 is a little slow season when it comes to our business and our geography.
Right. So it would be what, around 20% of our annual kind of sales? Is that a broad number too?
Around 20 to 22% of our annual sale.
Understood. And lastly, from my side, most of the reports and, media reports, diagnostic industry is expected to grow 13% CAGR in the next few years. From our, scale perspective, what will it take for us to grow, say, 15-17%? Is it just going to be, deeper dive in Telangana and Andhra Pradesh, going to interiors, and, what could be the rural contribution or interior contribution from, these core geographies for us? If you can help me understand, that will be very helpful.
So Prakash,
go ahead, Shiva.
So Prakash, currently, as you know that we are getting 83% of our revenue from Hyderabad, and definitely if you see the hubs that are coming up in the current year, they are near to Tier 3 and also some in adjacent and East India. So definitely in next 2 to 3 years, the contribution from these locations will increase. And also to, as you said, to grow more better than industry, we are trying our best. That is the reason even we are saying that instead of 4 hubs, we are even trying to get another 3 hubs, which are actually planned for FY24. Our projects team is extensively working to open these centers in the current year itself. If that happens, definitely in next 2 to 3 years, we will see a better growth. We will grow better than industry.
Okay. And any sense you could give from, rural or interiors of AP and Telangana, what would be, say, a percentage contribution on an annual basis, if you have that number ready?
See, currently it's about 14% of our revenue is coming from Tier 2 and Tier 3. And like tomorrow we are opening one center in another Tier 2 location called Rajahmundry, where we are going to build a big network over next 2 to 3 years. So per se we cannot give you any percentage, but definitely over a 3 to 4 years time you may see something more than 20% coming from these locations.
Understood. That is very clear. And lastly, how many reference labs do we have in Telangana and Andhra Pradesh as of date?
So as on date, as on 30th June, we have a total of 13 labs, out of which 11 are from Telangana and Andhra Pradesh.
Okay, 11 of the 13. That's very clear. Thank you. I'll join back if I have more questions. Thank you.
Thank you.
Thank you. The next question is from the line of Vinay Bafna from ICICI Securities. Please go ahead.
Yeah. Hi. Thank you for the opportunity. I have a couple of questions. So first I want to understand, this quarter we have benefited from higher percentage of revenue from radiology packages, etc. Is that the reason why our gross margin has improved significantly? And would this be the norm going ahead, or do you expect this to reverse once things normalize and your revenue from the radiology also dips back or something like that?
So, Prakash, yes, there is an improvement in the gross profit by almost like 5% year on year. That's because of a couple of reasons. One is the COVID revenue has decreased by almost like 90%. Okay, generally the material consumption in case of COVID business is almost double than the non-COVID business. Okay, that is one. And the second thing is share of revenue from the radiology has increased in overall pie. So material consumption radiology generally lower as compared to the pathology. So that's the reason why you see 5% benefit at the gross profit margin level. Going forward on a non-COVID, fully non-COVID business, what we expect is that material consumption ranges between 12 to 14%, depending upon the revenue mix profile between the radiology and the pathology. What we expect broadly is that this number of material consumption will be in the range of 12 to 14%.
Okay, that is very helpful. Second thing is that we are opening two flagship centers and we are incurring costs without any revenue. When do you think the revenues for these two centers will start accruing for the company and some operating revenues will start to flow in?
So these two centers, one is the Rajahmundry center, will be commencing from tomorrow, and the one more state-of-the-art facility in Panjagutta, which is at like 12,000, above 16,000 square feet facility. This is also almost the facility is ready. We expect that it will get commissioned by end of this month or the first week of September. The final activities are going on, pre-commencement activities. So the full-fledged revenue will come in from the Q3 quarter from these two centers.
That is helpful. Another question would be that generally such large centers, what are the break-even timelines at the EBITDA level? In 6 months, 12 months, what has historically been our trend?
So historically, if you look at it, our EBITDA break-even for large centers and also for the spoke centers, small centers also, okay, within the first 6 months period itself, what we have seen is the P&L EBITDA break-even happening. So even at these large centers, we expect the P&L EBITDA break-even happens in the first 6 months itself. But the only thing is that these, the reason for establishing such a large infrastructure hubs at these places is like a place like Rajahmundry. It has a potential to cater to almost like 150-kilometer radius, and where there's a potential to add almost like around 10 spokes, okay, once these hubs stabilize. So that's the reason why we're investing such a capex at this type of planned location.
Right. But generally, I mean, I understand for the spokes, it'll be, or hubs also, I can understand the timeline. But generally for such large centers is what I want to understand. I mean, say for example, Q3 we begin. So should we expect the margins to be under pressure for 6 months, 12 months? That is what I really want to understand, because if I look at your cost level, they have gone up substantially over the past 2 quarters. Obviously, this will have some OPEX related to your these two centers, which are not accruing any revenue. So that's the reason why I was trying to get a handle on that.
Yes, Prakash. So I think what Raju also mentioned is that, the centers, before they are open also, we are incurring OPEX, including the fixed expenses and salaries. Rajahmundry, once it opens tomorrow and, the other center opens probably in the next month, revenue, once it kicks in, the pressure on margins will ease for sure. And the further improvement will come as the ramp up happens, and, spokes, once they are added, of course, the spokes are usually more profitable than the hubs if you look at a cluster. But this particular quarter, what you are seeing is that the center is not open, but there is still fixed expense. So that has put some pressure on the EBITDA, which is temporary.
Okay, that's helpful. The last question is again a bit broad-based, and I think the opening comments management did try to address it. So about the competition. So we understand that there is a player in the region where you operate trying to offer steep discounts. I understand that it might be a temporary phenomenon, but despite that, we are seeing a heavy revenue bump up in radiology. Can you explain this phenomenon? Sequentially.
Sorry, Vinay, we couldn't follow it.
I'll ask the question once again. So I'm saying that despite very high competition in the areas you operate, in the region you operate, specifically in the radiology, we have given a good number in this segment in terms of revenue. So are we seeing that the competition is not having any effect, or is that we are also offering discount, but that is being offset by volumes which we are accruing in that particular segment? I mean, it's because that the competition is trying to give a very steep discount, but despite that, the radiology revenues are consequentially better. That's what I want to understand.
So as of now, I think Suprita mentioned earlier, we have not really made any changes to pricing, whether it's on packages or radiology. And we have not seen any real need also. Our business, and if you see our non-COVID business, the growth is quite healthy. We are seeing it, continuing and going forward also. So we have not really felt that there is a pressure on pricing or, that is affecting our business as of now yet.
Okay, that's very good to know. I understand that it's very difficult for you to break it down in terms of volume, but if it's possible, could you give me a trend as to what has been the trend when it comes to standalone radiology tests, prescriptions, I mean, not packages, if that has gone up sequentially or month on month, if you have any idea on that?
Prakash, the growth that we are showing month on month is from both radiology and pathology. I'll tell you, for example, if you take from March till June, in the 4 months, every month the radiology and pathology were in the range of that 65, the contribution is in the range of 65% from pathology and 35% from radiology. So we are seeing the demand coming from both the modalities, both from pathology and radiology.
Got it. And my last question is, this monthly rate, which you have shown in the presentation, June roughly about 0.76 million. What would that be as a percentage of a normal June quarter pre-COVID? I mean, would it be like 80%, 90%? I mean, how close are we to our pre-pandemic levels?
So Prakash, again, it will be like a little bit judgmental. So because the last 2 Q1s were not the correct 2 Q1s to compare, because we had this wave 1 in first Q1 and wave 2 in Q1 of FY22. But if you compare from FY20, so we grew at a CAGR of something like 9%. 3-year CAGR is somewhere around 9% on the total test volume. If you take only non-COVID, they are roughly around 8%. So what we feel is still, there is potential to grow anything between, 15 to 20. Ideally, we may be down by, 15 to 70% is what we think. But again, it's like a little bit the internal review that we have, and it's like very judgmental. We don't have anything in hand to say that we are currently at 80% or something like that. But what we feel is definitely there is scope to increase another 15% with the existing branches.
Got it. That's very helpful.
Because that we have already seen in June. For example, if you see the movement from April to June, it was almost about 12% increase in test volume.
Right. That's exactly why I wanted to understand how close are we to pre-pandemic levels.
Yeah.
But yeah, you gave a bit of clarity. That's very helpful. And this is my last question. So the test per patient is close to 3x this particular quarter. And historically, also pre-pandemic, I think we used to range in the range of 2.7 to 2.8 odd. So is this 3x the normal trend going ahead, or do you think it's a bit high in this particular quarter and should normalize going ahead?
So we expect it to be anything in the range of 2.8, 2.75 to 2.9.
Okay. Thank you. Thank you so much for answering all the questions.
Thank you. The next question is on the line of Sayantan Maji from Credit Suisse. Please go ahead.
Yeah, thank you for giving me the opportunity. So the first question is again on the test volume. So the reduction that we saw in 1Q23 versus say 2Q, 3Q or 4Q of last year, which were then relatively less affected due to COVID. So is it entirely attributable to seasonality, or do you think this quarter had an impact on the pathology segment due to the competition?
So I would not say impact. So if you see that was what I was mentioning in the last answer also. Like the volumes we have seen both from pathology and radiology. So as such, it's not that pathology which got affected.
Okay, so from 4Q to 1Q, pathology volumes did not get impacted apart from the seasonality that you see.
So fourth quarter is not an ideal quarter. So we can consider this with third quarter, because fourth quarter is again more of Omicron, right? So if you see that, in April, both the modalities got hit, and by June, both the modalities got hit up.
Okay, understood. And second question is on your costs. So has there been any increase in the discretionary cost, like, consumer outreach or say expanding your sales force to reach out to doctors? There I understand there has been some increase in cost due to opening of new centers, but apart from that, has there been any other increase from the usual levels that we see?
No such increase in any discretionary expenses, specifically on account of any marketing efforts. The usual costs are there with the annual increases, but there is no one-off expenses for any such marketing activities as such.
Okay. And my last question is would you have any like data or anything which basically tells you how much percentage of revenues do you get from repeat patients and how much do you get from new patients in, say, an existing center?
No, we will not be able to have that data because typically what happens is we're not a hospital, so you don't have unique ID numbers. So every time they come in, their name could be spelled differently, and it's a very difficult task. So we will not be able to get that data for you at the moment.
Okay, no problem. Thank you for answering my questions.
Sure.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. The next question is from the line of Girish Bakru from OrbiMed. Please go ahead.
Yeah, hi. Just trying to still understand this seasonality, which you say Q1 is probably 20 to 22%. I'm assuming generally if you have to compare lower volumes, I can just see the footfall. So what was the number, if you can give, for Q1 last year, excluding COVID, if you have that, for footfalls?
The footfall would be difficult, Girish, because it will be a mix of COVID and non-COVID. What we can give is the test volume, right, excluding COVID. So that is like roughly we had something like 17 lakh 30,000 tests from non-COVID last year.
Okay, and so this is basically just the behavior-wise seasonality, right? Less visits are happening in this quarter.
Yeah. Yes, correct.
Okay, and this is not specific to, I would say, Hyderabad or outside Hyderabad. This is overall in the network.
So, Girish, because except 2 centers, all of our centers are within like Andhra, Telangana, and this behavior is across these 2 states.
Okay. Okay, that's clear. And just on the 2 centers, Rajahmundry and Panjagutta, actually I'm just trying to assess the revenue contribution. You said that they will actually have significant role in next 2-3 years. So, I mean, if I go back to what you had commented in the past few quarters, Hub would typically do about maybe, 16 to 20 crores roughly, correct me if I'm wrong. And when you have, let's say, something like PET in Panjagutta, I'm assuming that revenue number will go reasonably higher. So, roughly, would it be fair to say that these 2 centers alone can give about maybe a 8 to 10% jump in FY24 when they're fully running from current base?
If you look at Panjagutta Center itself, Girish, you will have to look at it like I had mentioned. It will be one of its kind in the country. See, that's like a fully AI-based, it's a biometric MR, and the CT is a walk-in, walk-out kind of a cardiac machine. So like Sunil mentioned, centers like this, why they staffed earlier is there's a lot of training that goes in. These are highly specialized machines. As of today, if you look at our Himayatnagar Center, the wait for a PET CT is close to about 6 to 7 days. So keeping that in mind, if I say Panjagutta opens at the earliest, you're at least actually catering to what you have as a demand today, not even looking at probably getting in new cases for that. And the MR itself, probably to if you ask me in terms of 2024, Panchagutta, yes, probably about 4 to 5% increase there would come in. Right?
Yeah. So, Girish, what we are expecting is next in 3 to 4 years, we expect something like 40 crores of revenue contribution from Panchagutta
alone,
which will be about 10% of our current revenue.
So 40 crores you said from Panchagutta alone, is it?
Yes.
Girish, that Panchagutta center has to be looked at a center which is one of its kind. Like I'm telling you, the PET, the MR and the CT are probably maybe 2 or 3 in the entire country today. And the speed of these systems, the kind of cases that we can do in these systems, when we say the dual source CT, it's a walk-in, walk-out kind of a cardiac. So even if somebody is not cooperating, that case typically today in any center, in an imaging center, if a patient doesn't cooperate, we cannot test the patient. This is going to be different. Any case can be performed, so that case is happening. That is what is coming in Panchagutta. So we look at Panchagutta ramping up and giving this kind of revenue in probably 3 years of time.
So, Girish, if you currently see, Himayatnagar is somewhere around 60 crores of revenue per year. And also we have the second center, Nagar, which generates about 25 to 27 crores. So this Panchagutta will be, in between this Himayatnagar and
Nagar. And even distance-wise and the kind of clientele it caters to will be a little different. And when we come to Rajahmundry also, Girish, we do not have a center of presence in this geography 200 kilometers in and around. This is completely new geography. In fact, that's also a reason why I'm sitting here in this, doing this call from Rajahmundry today. And it's an important center for us. So if this center stabilizes faster, the incremental growth will actually happen faster because the more number of spokes will open. And I do not have any centers in about 180 to 200 kilometers here.
This is very helpful. And just if I want a clarification, so you have 2 PETs now, and is it fair to assume you are the only one doing PETs in this region?
No, the PET we do not have a PET in Rajahmundry. We have a gamma camera in Rajahmundry.
Yeah, no, PET in Panchagutta and PET in the main Himayatnagar center, right? So there are 2 PETs already in the network now.
In our network, there are other PETs also available.
So Girish, we have PETs outside. There are PETs in hospitals, but in diagnostics, other than us, I think there is only 1 or 2 PETs in the diagnostic center, other than Vijaya.
Right, yeah. And when you say the wait is around 5-6 days, I'm assuming wait is similar outside as well.
But again, we come back to our philosophy here, Girish, that we give the best at maybe the lowest and the most affordable price. So if a PET is priced at about 16,000 in Vijaya, Hyderabad, the competitor pricing would be around 22 to 26,000.
Okay, and do you take typically any price hikes in this advanced radiology side?
So last 3 years, we've not done any price hike in PET, Girish. It's more on volume. We used to do about 17 per day. Now we are doing about 20 per day on one machine.
Okay, thank you. This is very helpful.
Yeah.
Thank you. The next question is from the line of Rahul Javani from IIFL. Please go ahead.
Yeah, hi. Thanks for taking my question. Sir, you indicated that the non-COVID volume growth for us on a 3-year CAGR basis is around 8 to 9%. So did you refer to that for the June month, or that is the run rate which we saw for the entire first quarter?
That is for entire first quarter. I don't have the June number handy, but it will be more than 10% for June.
Sure, sir, sure. And on the realization, so if we see pre-COVID, our realizations on a per patient basis used to be around 1,200 to 1,250 rupees, and now we are at around almost 1,400 rupees. Obviously, this quarter we would have benefited from a higher share of the radiology business, but where do you think our realizations can sustain over the next 3 to 4 quarters?
So, Rahul, there are 2 reasons for the realization to be at 1,300. Because if you see the number of tests per footfall in the current quarter, it was around 2.98, which was highest, right? Previously, pre-COVID, we were around something like 2.7, 2.75. right? And also radiology in the current quarter was around 35.7. That was the reason we are seeing that highest realization. Whereas in Q4, if you see, average test for footfall was just only 2.3 because of Omicron. That was the reason it was at 1200. But if you ask me for the future, it will be anything in the range of 1250 to 1300.
Sure, sir. So 1250 to 1300 looks like a more sustainable number for you.
Yes, correct.
Sure, sir. And just one last question on this revenue potential which you spoke about from the Panjagutta Center. So you are looking at a revenue of 40 crore over the 3-year period as an annualized revenue contribution.
Correct. Yes, correct. Yes.
And just one clarification. So you said Himayatnagar, which is the flagship center for us, is now annualizing at a 60 crore kind of a revenue run rate. And obviously that center has been in operation for almost, let's say, a decade. So do you think that Panjagutta center can hit that 40 crore kind of a revenue run rate within the first 3 years itself?
Yes, Girish, we are pretty confident on that. In fact, because of reasons I've mentioned, because of our own wait times not being able to cater, and at the same time being affordable with the best quality, we still see that going, and we're pretty confident on achieving that.
Also, Rahul, the center is located close to a very, very large institute. It's called the Nizam's Institute of Medical Sciences, kind of like an AIIMS in Delhi. It's the largest government hospital in our city. So this center is located, right next to this institute. And a lot of these services which are not available in that institute will also flow to this center.
Sure, sir. And would you have any sense right now where this volumes from NIMS would be flowing into, as in because there are no alternative options available as of now?
So Rahul, currently what? Okay, sorry, sir.
Yeah. So I think right now, of course, whatever is not available is probably being shared or distributed across many centers, including maybe we also get some small part of it. But there is no center which is right next to this institute. This center that we are opening is firstly the closest in distance terms. Secondly, the equipment that we are bringing in is, I think as Suprita mentioned, a dual source CT. This will be one of the first, 2 or 3 installations in the country. Similarly, the kind of PET, the kind of MRI which are being installed are almost like research level equipment. So I don't think any of the other centers will even be able to offer some of the kind of tests or services that this center will be able to do.
Sure, sir. Thanks for answering my questions.
Thank you. The next question is in the line of Cinderella Thomas Carvalho from JM Financial. Please go ahead.
Yeah, thanks for the opportunity. Ma'am, just wanted to understand, you spelled out in terms of, Panjagutta, how much of revenue potential we could see. What is the number that we are seeing for Rajahmundry over coming 2 to 3 years?
So, Thomas, I think even during our IPO and the roadshow, we had indicated, that in our business model, typically we look at hub centers. Once they stabilize, they can contribute a minimum of about 12 to 13 crores. That's the broad business model. Of course, when you have some hubs like Panjagutta is actually I would say unique. It is almost comparable to our flagship center. It's one of a kind. But Rajahmundry is a more typical hub. So we would expect that, it will behave in that same model, typically where a hub stabilizes, depending on the equipment level. Like if you have a PET CT, it could be more. If not, typically like other hubs historically have stabilized in tier 2 locations at about 12, 14, 15 crores. So we expect it could be around that range. We can't really give you a number on.
But if you ask me, like I told you, with no presence in about 150 to 180 kilometers here and this stabilizing, if you're asking me at the end of 4th year, I would very, very confidently say that we would be able to achieve a revenue close to 20 crores.
That's very helpful, ma'am. And just wanted your sense around how are we seeing the competitive intensity outside Hyderabad city and within Hyderabad city? If there are any recent trends that you have seen lately, wherein you're seeing any normalization in the intensity, which you would like to share with us.
Sure, Singh. So especially in Hyderabad, what we see is we see more of the aggregator and the digital kind of competition coming in. That is a different kind of competition. But especially where we have been putting our focus and growing all the tier 2 and tier 3 locations, these are locations where unorganized players, smaller nursing homes, and I don't think these places have still caught up to a fact where they would probably be looking at prices and doing home collection. So they're still a little more conservative, and the kind of competition is completely different in both of these areas. And that's also a reason why when we do centers like the inauguration tomorrow in Rajahmundry, our focus is more in terms of trying to invite people to see the facility, to differentiate between a center that is like Vijaya and all the unorganized and smaller chains. So basically that entire I think the conversation that we have with the customer in these tier 2 and tier 3 towns is what has built that entire brand recall for Vijaya over the last 40 years. So what the plan for these centers is doing more health camps, health awareness, showing them the facility. And again, like I told you, we have these lifestyle guides who basically give them small tips on their lifestyle changes, wellness bit. So this has been the activity. This is not something that we do a lot in the city as of now. City is in terms of an entire health package getting done. But all of our tier 2 and tier 3 places are more conservative in nature. They want to be spoken to. They love seeing the facility. So if tomorrow is our launch, we've already had close to about 50 people visit the center today, just to see whether it's the center from Hyderabad and how is it and is it well equipped. So that's like a very positive factor for me.
That's very helpful, ma'am. And just on this quarter, how much of cost or OPEX as a percentage of sales we might be carrying from the new center perspective, if any number that you could share, and what could be overcoming 1H? Till the time the earnings start flowing in from the new center.
Sure, I'll let Raju take that question. Sorry, I think there's some. 1 second.
Yeah. We joined
okay,
back.
Ma'am. I'll take it offline. No worries. That's it from my end.
Thank you. We'll move on to the next question. That is on the line of Priya Harwani from Perpetuity Ventures. Please go ahead.
Hello.
Yes, ma'am. Your line is in the talk mode. Please proceed.
So thank you for taking my question. So I had one doubt. So ma'am, you said that you will be adding 15 centers every year. So how many centers we are planning to expand out of Andhra Pradesh and Telangana?
Ma'am, majority of these centers are outside of Hyderabad. So there is a mixture of centers coming up in Andhra and in tier 2 regions of Telangana. Exact number I might not have now, but the combination still remains the same of 3 to 4 hubs versus 10 to 11 spokes coming up. And like Shiva had mentioned, just to actually perform better, the project team is extensively working. Probably we will try to open a few extra hubs so that incremental growth of spokes also comes in next year early.
Okay. Thank you so much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. As there are no further questions, I now hand the conference over to the management for the closing comments.
So, on behalf of Vijaya Diagnostic and the management, I would like to thank everyone for attending this call and for showing interest in our company. I hope we have been able to answer all your questions, and should you need any further information or clarifications or would like to know more about the company, please feel free to reach out to us or to CDR India. I think we can provide answers to your queries or any information needed. And thank you once again for taking time to join this call, and we hope to see you all next quarter. Thank you.
Thank you. Ladies and gentlemen, on behalf of Vijaya Diagnostic Center Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank